Oliver, what is your preferred method to entering short-term options trades? Also, your opinion on which bid-ask, also your opinion on the wide bid-ask premium spreads. Well, Corey, you touched upon exactly one of the reasons why I do not like using options for short-term oriented trading. You see, options were primarily invented to serve as a hedge. So I'd say that 95% of my use with options is to hedge relatively large positions that I'm holding. All right. And they're not designed for short term oriented trading. The spreads are too wide, so you get killed on the spreads. All right. The mispricing of options. So it's easy for an option to become undervalued and overvalued by a wide margin. So you could, in addition to a wide spread with options, you could be getting in at a misplaced value in the option. All right. And there are liquidity concerns with some options as well. It's just the poorest vehicle for short term. It's a great vehicle for hedging. It's a great vehicle for picking up extra income. All right. And these are some of the things I'm going to be doing in the near future with some of my Bitcoin traders. So, for instance, once Bitcoin gets far away from certain key moving averages, we can start selling covered calls against the Bitcoin. All right. There's some risk, and every method or every technique has some risk. So you have to understand the risks in a strategy like that. You can use options to pick up an asset that you want, but you're going to gain some extra income while picking up the asset. So as an example, with using BTC, if I want to buy at lower prices anyway, then I can sell a put against Bitcoin, collect the premium of the put. And if I get put the Bitcoin, I wanted the Bitcoin anyway. And so I just got Bitcoin and some extra income. So it's these strategies that options were basically created for, and hedging against an overbought or oversold asset that you might specifically have at the current moment. But when you get into trying to replace trading stocks with options because you think options are cheaper, you're really a poor man playing. You're playing the poor man's racetrack, which really produces a lot more losses. There's a 92% failure rate trading the underlying equity itself. Now, when you go to a derivative of the equity like options, it becomes immensely more complex. So if there's a 92% failure rate trading the item, then what about the derivative of the item? You take the losing rate to 98% because of all the reasons I mentioned: wide spreads, inadequate liquidity at times, mispricing, and the number of games that options market players can play are exponentially larger than the games that the market makers can play in equities today. All right. So all of these things make short-term oriented options playing really, really a bad choice. And let me just say this about this, guys. I want you to understand that throughout history, people that have inadequate amounts of money have been the number one victim. All right. The number one victim of most financial operations. So let me give an example. What I'm trying to explain to you is that what's enticing, what has been used historically to take advantage of the poor and of the inadequately capitalized is a story that you can make big with very little. This story has been responsible for most of financial atrocities amongst the poor throughout history. All right? They're taken advantage of because they don't have. They're taking advantage of a story that tells them you can become big, you can become wealthy, you can become rich, you can have success with very little. And so this story gains a lot of the very little coming in masses, not knowing that in life, in financial life, you can't make something with a little, that it takes money to make money in this world. That you can't have a little and make it into big 99% of the time. I am not saying that there aren't exceptions out there. I'm not saying that you can't point one out of a billion people, maybe two out of a billion people. I'm not saying that, but that's not going to be the vast majority of experiences for most people. And so options attract people that don't, to trade, day trade, usually attract people that are not adequately capitalized, and they look at the smaller prices of options versus the equities that the options are based on. And that's a mistake, because 99.9% of the losses that happen in options come from the cheap, lower cost options. The money making options are the expensive ones. And there we are back to that whole thing. It takes money to make money.